please feel free. You may interact. So me no can talk plenty. I'll leave it to our good director, Miss Katie Masu, and person behind also having all of this put together for us, giving us that space. So thank you.
Yes. So, me, Masu, I'm Director in Policy Advice Division and Leader in the Taxpayer Services of Implementation. So, as I said, I'll be having you through facial companies. So, I believe most people here are conducting a business under a company. Some people maybe not business yet, maybe not business, maybe not a company. So, we have to through expression side of companies. So, yes, business are different dollar structures. So, you decide on the type of structure you use. Whether you want to run a business under a company, or sole trader, or you go partnership, one thing, one or two person, even joint venture. All this kind. That's your decision to make. Also, it is important that you understand the legal and commercial requirements and the tax law, the requirements and all that. Running business, nothing got us all register, now you running business. When you go and register with IPA and come and register with IRC, there are certain requirements or responsibilities that you must know. As a company, these are your requirements and all that under IPA, under different regulatory agencies, and even tax side as well. This like you must have. Sorry, I'll just turn to that while they fix that. Okay, and there are several business structures, and each have. Sorry, I can hold on to it. Sorry. Yes, there are several business structures, and each have different requirements, including tax treatment. So, just now I mentioned in PNG, the common legal structures for businesses are sole traders, partnership, joint ventures, and company. So, what is a company? So, we play a definition underneath the tax law, which defines a company. We in IRC, we administer tax laws, the income tax law, GST law, stamp duties law, all laws law taxation. And for us to administer all definitions number out, we guided by the act. Unless suppose no definition law act, na mi plago arasite law dictionary or the general definition na. So under the Income Tax Act, that is the definition of a company. So it includes all bodies or associations, corporate or unincorporated, superannuation funds, motor vehicle insurance funds, but does not include partnership. What is a company? It is a legal entity that is separate and distinct from its owner. When you incorporate as a company, the company is like separate from the owner, unlike sole trader. The owner and the business and all that, it's the same person. So owners of a company are referred to as shareholders. Its shareholders or owners are not personally responsible for the company's debt. So suppose company, like for example, they have tax debts, we cannot go after the shareholders. We go after the company. They're two different, separate, they're distinct. Yes, that you must know. Unlike as a sole trader, if you are in debt and all that, we go after you. You don't pay up, we can, possess your assets and all that. With companies, no. If we had to possess the assets, it's the company assets, not the shareholders, their assets and all that. And directors are the ones who manage their company's business and affairs. I think you play along other person. Business affairs, because you are reporting to us for the purpose of tax. We are bound by the secrecy provision not to be disseminating your information to other people. Something line, but okay, be talking me. This particular company or person, how much is he paying in tax and has he lodged and all that? We as IRC officers, we are bounded by the secrecy provision not to release this information. So when you incorporate a company, we want you to notify us of the public officer. So that is the person that we communicate with, and that person communicates with us with respect to the company's tax affairs. Residents, why it's important to know, to know about residents. Well, definition again in the Income Tax Act defines what a resident company is. So a resident company is one which is incorporated in PNG. So sagona lo IPA na incorporate. Oh, tapos company ay incorporate lo PNG, maybe an overseas company and all that. So long as it carries on a business in PNG and has either its central management and control in PNG or its voting powers controlled by shareholders who are resident of PNG. Then we treat them as resident companies. Why it's important to know residencies? Because we have different rates for resident companies and non-resident companies. So all these things are taken into account, for tax purposes, for the purpose of calculating tax and allowing deductions and all that. So for super funds means the fund which is established or managed in PNG. You got number one super and a NAS fund and all that. So for a non-resident is one which is not incorporated in PNG. So we have plenty overseas company. They come do business here. I think they are required to register with IPA to registration to do business here. They don't incorporate here. They've incorporated in their own country, home country, but they are doing business. I think it's a requirement under IPA for them to register with IPA in order to do business and all that. Every company that operates in PNG must register with IPA. Yes. The register with IPA pinis or kamlo IRC. IRC registration mipla by ask him, give us the IPA documents. Yeah. Liability of a company. A resident company is taxed in PNG on its worldwide income. So if you're a resident company in PNG, but you also have income, you got businesses overseas and all that, anywhere around the country. When you lodge your return, you have to disclose all that income, and we tax you on your worldwide income. If you're a non-resident company, you only pay tax on your PNG source income, the income you are earning or receiving from PNG source. Maybe you'll ask why. Because for this non-resident, whatever income they have in their country is taxed by their tax authorities. So we only tax the income that they earned in PNG. Okay, corporate tax rate. You have there resident company. The rate is 30% flat on its taxable income. Later, I'll explain to you what taxable income is. I think plenty man, Mary, there's a lot of confusion out there. You think this la income you work him here, maybe like put him tax on top of this la income. Now that Mipla must consider him because to run your business, you have business cost now. So whatever is left, who's registered and you're paying your taxes, filing and all that, you may have heard about provisional tax. I think plenty line tools are confused because like we have provisional tax, corporate tax, personal withholding, different one and also plenty taxes to mass. And they're afraid. They think that they're all subject to all those taxes. No, God. Company first tax that you are subject to is corporate. And then depending on, suppose you got employees, then salary wages, you have to deduct. And then depending on your transactions and all that, or your company, you pay dividends, go to shareholders, below you. That's when dividend withholding tax kicked in. But primary one and tax below you and corporate tax if you don't enter into those other. So provisional tax is a prepayment of your company tax. We don't just tell you to pay your company tax in one hit. Me plus sort of spreading this law. Say you have 10,000 kina to pay as company tax, but me plus instead of just paying it on a certain one go, we split the payment into three. We say you pay him 3,000 or maybe April, you pay him another 3,000 in July, and the balance you pay in provisional tax is not the actual tax assessed. It's just a prepayment. When you lodge your company tax return, we assess you, process the returns, and now we determine what your correct tax liability is. Through the provisional tax, if you have paid less than what we actually determined, you pay the balance. If you paid more, we refund it. So, yeah. So, provisional tax notices, we normally issue those assessments earlier in the year, around March. The first installment is normally due around April, second somewhere around July, and the final installment around October. That's just a prepayment and estimation of your sorry, I think estimation of your company tax. Like I've said, you lodge when you file your tax return now, we determine your actual what then, and we credit what we've collected against that liability and see whether you have balance to pay or we refund because you've overpaid. And so it is calculated using the information from the last CIT. CIT is corporate income tax. Acronym long, corporate income tax. So the information we use to calculate your provisional tax is based on the last return that you lodge. And the amount, like I've said, the amount that we've assessed and you paid when you lodge your tax return, we credit it. You've already paid some tax in advance, so we work him out liability below you, and talk, okay, but they paid this much already, so how much left to pay? Or if they pay more than that, it's to be refunded. So may I take questions at the end of the session? Okay, TIN registration for a company. I think Aster, my colleague, did cover that, but this is for a company, and I'll just go through the company registration requirement. So we have two TIN application. TIN one completed by the company. You incorporate the company and all that. You come and complete TIN one application. TIN two application four. It's completed by the directors of the company. We talk finish. We are getting directors to also register because they manage the affairs of the companies. If they fail to, comply and lodge their returns, tax outstanding, and all that, we held them liable for the liability of the company. So you all, some of the directors here, you must survey us, and we can, we'll hold you liable for any liabilities of the company. And supporting documents to provide for registration, like I said, company, so IPA certificate of incorporation. Some blah, 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 you incorporate a company, but you'd like to use a business name. So you register with IPA, you provide that as well. Provide also the company extract, and for the director, a valid photo ID. Okay, the responsibilities of a registered company. Emia, you play looking at the sample, and I hope you can see that. responsibilities. Once you are registered as a taxpayer and all that, keep proper business records and maintain your books of accounts. As a company, you not only have your invoices and all that simple, but you're required to maintain books of accounts so that you can produce your profit and loss statement, which are required when you lodge your income tax return. Also, you have to file Form C. I think one officer below me put him all tax returns there. Form C is for company income tax return. So you work in business this year. At the end of the year finishes. When you report and when you file your return, you report for a 12 months period, one financial year. Your income and expenses incurred from 1 January to 31 December. You know, na lodging one return, it covers 2-3 years. No, got one return for one financial year. So yeah, when you fill that in, you have to lodge the return by 28 February the following year. So for this year finish, you kiss him this form, you pull up him by 28 February, it must be there with IRC. Otherwise, you are late, we have penalties. So it's annual filing. Company one return Form C, you file, you prepare it at the end of the year and lodge it by 28 February. So once you file, we process the return. We calculate what tax you have to pay. If there's a tax to pay, liability, like if you made a profit or a taxable income, we levy tax on that, and we process and issue you with a notice of assessment. That notice of assessment will say that you have 30 days to pay the liability. Now, you don't pay him, you got penalty lodisla. So lodisla you must clear. If you are unable to meet the 30 days before the due date, call IRC or write to IRC. Can you please just extend? Or this takis big platumas. Can I enter into a payment plan? We have all those available and all that. Come and see us. Don't wait till it's too late and we start garnishing your, bank accounts or taking you to court. We are there and we have means to, assist you. Okay, another responsibility is keep proper business records and maintain your books of account. We talk here, suppose you like business, maybe your receipt books, na cash books, you keep simple records, but now you operating as a business, you are required to be, preparing from those source documents. You prepare your journals, ledger, trial balance, and then you come up with your profit and loss and balance sheets. And those are the profit and loss balance sheet. Those are the information that goes in the tax return. So you need good records to monitor the performance of your business. You know that record. You might not say whether your business is going okay or not and all that. But if you keep record, you will know where you are, in your business, and you can make the right decisions. So yeah, so keeping good record, this increases the likelihood of your business success. Okay, I think I've covered this already. Sorry. Okay, paying your correct tax liability. Yeah. So yes, so yes, when you receive your tax return by 28 February the following year, we receive it, we register that you have lodged, and then we enter it into our system. It's called SIGTAS. So we enter it into the system and it processes and it calculates whether you have to pay tax or whether you don't have to because your expenses are more than your income. Suppose you are in a loss. That loss is an allowable deduction for the following year. So say you made 10,000 kina in income, but your expenses were 12,000 business expenses. So you made a loss of 2,000. We register that loss. So next year time you got income. Now we allow that loss as a deduction. The loss can be carried forward for 7 years. Yes, 7 years. So you'll utilize that as a deduction. Now. So yes, me play process him now. Where you have a liability, me talk finish. We issue you with a notice of assessment. The notice of assessment will have a due date for payment. We talk stress him can. If you can't pay by the due date, contact us before due date. Now we play like penalizing you. All we want you to do is pay the correct amount of tax. Now, sorry. Okay, mi tok long income tax return. You got lo front lo yupla. The form is approved by the Commissioner General. You cannot declare your income or expenses using any other form. To declare your expense and what for tax purpose, you have to use the forms that are authorized by the Commissioner General, and for companies, it's Form C. This form is used by you as taxpayers to file information about your income and your business expenses and the tax you have to pay on whatever is left of your income after you deduct your expenses. The net profit, like in the ordinary one, we even talk net profit, but tax language we say taxable income. That's where it's taxable. That's where tax is levied, not on your gross income. We consider all your expenses and all that, and whatever is left, tax is levied on that. So your business structure determines the type of tax return to file. So you guys here operating as companies, so it's Form C. Those individuals who are operating as sole traders, it's the PIT return. And those who come under SBT, they file SBT returns. Okay, so who files a company income tax return? Normal companies. Those who are operating, gone and incorporated as associations, business groups, youth groups, superannuation funds, motor vehicle insurance funds, and branches of a foreign company. So associations, those who are here that you formed association and under the tax law you would treat you as a company. Business groups, youth groups, you are treated as a company, so you follow the company what is required of a company for taxation purposes. Branches of foreign company, I think I did mention, for foreigners who are coming and doing business here, they are incorporated outside of PNG, but they must come and register with IPA to conduct business. So they conduct business here through branches, office, and all that. So we tax that the income that they earn here at 48%. Again, all those ones who are required to file, 28 February is the filing due date. Okay, tax return information. The information you put in your income tax return is from the books of accounts that you keep and where you record all your business transactions. You just don't get the return and fill it with any numbers and all that. It must come from your books of accounts. And again, I'll stress record keeping is a requirement for taxation purpose. You file your tax return, we assess you, but we have auditors that go and check your books. What you're declaring, is it true? They check against your record. There's a heavy penalty if you are lying, making false declaration. And also, you do not mix your private transaction with business transaction. Keep practical example I have here. XYZ Limited was incorporated in PNG in 2019. So straightforward, like you see, incorporated in PNG, we know it's a resident company. Because definition for resident company, you must be incorporated in PNG. Incorporated in PNG, 30% tax applies. The rate is. So this particular company commenced business in January 2020. So by the end of the year, they complete their tax return using the books of accounts that they have, and then they lodge the return by February 20, 2021. They lodge within time. Due date 28, but I'm lodging 20, so no got penalty. They're within time. The source of income from trading. So in the tax return, they disclose the income they make and all that for the year. Like in my example, later when we go through the returns and all that, like I sort of, this company is making money from trading, contract income, I'm some contract or maybe NCD, and I'll give me money, and had rental properties and was making rental income, receiving rental income as well. Contract, we assume that this the contract or this business is stop long. It's within, the for certificate of compliance, blah, 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 maybe you've applied for certificate of compliance. There's 5-6 sectors that this certificate of compliance applies to it. So in my example, I made it that this particular company is within that sector, so the provisions of certificate of compliance and all that is applicable to it. So with certificate of compliance for contractors and all that, when they perform work and all that, they go to receive the payment from whoever is contracted them, whom we refer to as paying authorities. The paying authority will say, present me with a certificate of compliance. No got compliance, paying authority will deduct 10%. Now give you 90%. 10% only deduct him, remit it to IRC. Later on, end of the year, you file him tax return, we wake him out tax, we credit that amount back. You've already paid in the form, on contract income that amount, so we credit it back to you. So so in this example, I said the taxpayer didn't have any certificate of compliance. Certificate of compliance, we only issue it when the taxpayer is compliant. We see that they are lodging, they're filing their taxes, paying their taxes and all that. So we tell the paying, it's sort of telling the paying authority, we trust this taxpayer is going to come and lodge and pay. Give them the full amount. But because you are not compliant, we better hold him this 10%, salim kamla mipla. Only lodge him return now and mipla work him out tax now, we credit it against the assessment. And then also in this example, I think I touched on provisional tax. So this company had paid 20,000 as provisional tax for the 2020 tax period. So when they are compiling their tax return, they put these amounts in their tax returns that they've paid. Okay, so this is my example of a profit and loss. You keep records, invoices, cash books, bank statements, and then from those you put them into journals. You plus accounting, all entries. I'm now putting journals. From the journals, you prepare your ledger. From the ledger, you go to trial balance. Trial balance, now you do up your profit and loss statement and your balance sheet. So for this particular company, for the year ended for the period 1st January to 31 December 2020, this here is the profit and loss statement. You can see I have sales income. The company was trading, making some sales and all that, 200. You take away the cost of goods sold. Cost of goods sold, I think plenty I think you do. You're running your business as a company, so I hope you all know. It's your end of last year's opening balance from last year's stock inventory plus purchases, and then you get your cost of goods sold, and then you come up with your gross profit. Okay, so from the sales, the gross profit is 80,000, but this particular company also received rental income, and they had properties they rent and all that, so 20,000 in rental income. And then we talk about contract. The company did enter into contract, perform some services, and got 50,000 as contract income. And like I mentioned, no certificate of compliance, so the paying authority had deducted 10% out from this contract income and remitted it to send it to IRC. But when you are those withholding tax, when they take it out, when you are filing and declaring the income, you don't declare the net. You have to declare the gross. So like we talk here, like 50,000, 10% of it, that's 5,000. So if they would have, if this company would have declared the net, it would be 45,000. No, you have to declare the gross. And then, okay, we talk here, you run a business, there are costs to running business. Working profit, that's all. You have to pay for certain expenses and all that. So for this particular company here, these are the I've listed there. the company's got employees, so paid salaries of 16,000 to its employees. And then some repairs and maintenance. Maybe the rental property needed some maintenance, repair work done. So but those are like revenue generating assets and all that. So we allow those as deductions. Even maybe there's a vehicle there that they use in uh, transporting their goods and taking them here and there for business purpose and all that. The car is have a tire flat and all that. Some repair and maintenance to do. And then we've got property rates and taxes for like residential. I mean, yeah, rental properties. These are some of the business expenses that you're likely to incur and all that. And this is insurance, advertising. Maybe you got or rental properties, so you want to advertise, out in the paper, say I've got rental properties here and all that. Those are costs to doing your business. Those are allowable deductions. So and then borrowing expense. Maybe you got some loan and there were some expenses you incurred in getting those. Yeah. So with my example there, so I've got income there of 70, 70 and 80. So I've got income of 150 less my deductions, the total expenses there. You can see I've added all that up, 44,410. And my net profit is 105 kina, 500 and that's not where we levy tax. Not yet. Okay, and then apart from submitting the profit and loss statement, you also required to submit your balance sheet, balance sheet and all that. So this is the balance sheet, the example that I've got here. So the assets there, your land and building value of 2 million, some furnitures, machineries, investments, then your current assets. So a total of your total assets is 2 million, not yours, but this company, yeah, 2,160,000. And then yes, continue with the balance sheet. Owner's equity 1.7 million. Non-current liabilities, loans, creditors payable, and all that. So total equity and liability 2,000,001. You as a company, you want to operate as a company, you have to do this. You have to file this. Deduction for business expenses. General rule, tax general rule. Deduction is allowed for any loss or expenses incurred in gaining or producing your assessable income. So this like income below you work disclose him. The expenses must be related to gaining that. You cannot claim an expense that doesn't have any bearings on the income. Yeah. For example, trading income, and then they claim funeral expense. What has funeral expense got to do with you? Like those are not expenses incurred in gaining that income. Yeah, so they must be related to gaining that income. Yeah, bright price to yeah. I think we're up in the Highlands. We did awareness in the Highlands, and some of the Highlands guys said you should allow compensation. Yeah, if you don't pay compensation, and it's got nothing to do with running your business. So yeah, yeah. So and a deduction is not allowed for losses or expenses which are of capital in nature. However, a deduction is allowed under special provisions. Example, depreciation allowance. Say during the year you work in business, and then you see that you need to have a truck, trading and all that. You get higher vehicles to come and give you your supplies, but you thought, I've made enough money. I'll buy a vehicle to run my business. So you go and buy the vehicle. You cannot claim that whole amount you spent on the vehicle. The cost of the vehicle is a deduction. We split it over. Okay, that vehicle is going to last maybe the effective life of the vehicle is 5 years. We divide 5 by the cost of the what, and then we allow you a deduction in like 20,000 the first year, second you claim that through depreciation. Yes, that's an expense or loss must be incurred for it to be allowed as a deduction against income. You must incur that expense for us to allow it as a deduction. Any private expenses, they're not allowed as a deduction. Ito private expenses, also you talk house cry, compensation, or bride price. It's like private, yeah. They're not part of your business, one. You cannot be claiming those. What's that? But when we come around and audit you and we find you are not doing the right thing, be prepared to pay for penalties. And I think we are carrying out this awareness, making you aware of your requirements, what you must declare, do the right thing. You cannot have excuses and say this and that. You're attending our sessions here. We are telling you you must do this. We talk, yeah, we don't want to penalize you. All we want to do is you do the right thing and pay your correct amount of tax. That's it. And we are always there to, assist you. Maybe conducting awareness free of what? We don't charge you for any services that we provide. The only thing we charge you is that tax that you pay to the government. We are only a collection agency. Maybe collecting tax, give me government budget team, bili mo roads blo yumi, school blo pikinini blo marasin blo house sick. So we, as citizens of this country, take pride. This is our nation. We should build it, develop it with our contribution. Not kind expecting government to sim loan no, China or whatever. The loan amount is going big because government doesn't have. It's not collecting enough from taxes. We must fund this country's development through our contribution, loans and all that. Yeah, you may lose him. Otherwise, in a long time, China will come and take over Papua New Guinea. Do we want that? We don't. Be patriotic about your country. Take that responsibility, pay your taxes. Now we go into the calculation of your taxable income and calculation of that company income tax. Me talk pinislo in my previous one name taxable income. We levy tax on taxable income. Plenty blah by asking what name taxable income. So what's the difference? So I'll go through that. So this is the tax equation. You start off with your gross income you you earn, and then you minus all your operating expenses. They have to be business expenses. Expenses in relation to gaining that particular income. And then with that income, there are some deductions that you claim, but under tax law, it's not allowed. We add that back. And there are certain deductions, and then we allow for some items that are deductible under the tax. And then from that result, we get the taxable income. Taxable income is where we levy tax. So you see, we've considered your expenses, whatever expenses you've incurred in gaining your income. Whatever is left, plenty by talk net profit. Tax one year, we talk taxable income. We talk pinis, your resident company rate is 30%. I think plenty blow you me or nearly almost all of it. And one to the next 20,000, 22%. So under personal income tax, as your income increases, the tax rate increases. That same tax rate applies to salary wage earners, employees. And so yeah, you get your taxable income. From there, we have rebates and credits. Credits, one of the credits, some of the credits that I've mentioned is BPT, business payment tax that paying authorities have remitted to us. The provisional tax, the prepayment of your corporate tax that you already paid to us. So when we calculate your taxable income, we credit those payments against whatever liability is there. You pay the balance, or if you have paid more through rebates and credits, we refund that to you. So there, what is taxable income? The calculation of taxable income. So using our example, the example that I gave of the company, you've seen the profit and loss statement. From the profit and loss statement, you saw that our gross was 270. Our total expenses in the profit and loss was 164, 410. There were no add backs and no items of deductibles. So our result is the taxable income of 105,590. This is the amount that we levy the tax, the 30% tax on. Taxable income tax, so the tax 30% of 105,590, gross tax 31,677. But we already said, you know, got certificate of compliance, paying authority deduct him 5,000 or 10% of your contract income, which is 5,000, and remitted it to IRC. So we credit that amount. Okay, tax belong 31,677, but and pay sample tax through BPT. So we subtract that. Also, provisional tax assessment to go out. The company has paid 20,000 as its advance, payment of its tax, company tax. So we credit that against the liability that we've raised of 31,000, leaving a balance of tax of 6,677. That balance, we issue you with a notice of assessment. You have to pay it within 30 days from issue date of the notice of the assessment. Mitoken, if you are not able to pay your tax by the due date, contact us before the due date. We have our delayed section, that's lodgement and enforcement unit. They're the ones that you have to contact. And I would encourage everyone to contract via a formal letter. A formal letter, you email it, so there's a track of your correspondence or whatever you. So that's how we calculate the company's liability. With this example, I just had two examples of like credits and provisional. There are other credits and provisional tax, but I don't want to complicate you guys with all these. Yes, Amla. So I try to make it in a simplest form for you to understand. That sample withholding tax you place a BIM, it will be. That's not the final tax. That's the mechanism we use to get some tax, so we get taxpayers to comply. Otherwise, suppose for example the contract income. If the contractor or the person paying the paying authority gives you the payment full amount, are we going to expect you to come and lodge or what? Plantis are run away as well. Like it's in full payment and they run away. So this withholding taxes that we have is a form of like helping us to collect some revenue, at source, and then we credit that against when the tax return is lodged. So asking you do the right thing, as there are penalties for not filing, late filing, and non-payment of your tax. We want you to avoid all the penalties by filing on time, so it should be on time, and making your payments on time as well. Toki yupla all get the services from yupla and free, No can think of saying you become lumipla na. I mean, if people are charging you, you have to report them to our internal affairs. We have a lot of, I think, Commissioner General been talking this year. We have zero tolerance on corruption. So people demanding money for the service IRC offices and all that, that's not right. So report them. So we encourage you. We are there. Come and see us. Come and see us if you need help. Yes. Now, Commissioner General been talk long speech long all on the tax information kit. It's a very helpful kit. Sort of takes you from business structures to registration to compiling your returns, paying how to pay your taxes. If you are not happy with our assessment, of your tax liability, where do you go from there? Everything from end-to-end process of the tax administration, what it's captured in that particular document. So we hope to have that out by this year. Okay, now I'll take you through the corporate tax return. I think you've all got a copy, yeah? Now. Oh, some are sharing. Okay, we'll make some copies available after. Yeah. Okay. Hamas play pulapi ma all this la written finish. Put him hand go on top, blong, I'm not. Okay. So a lot of you haven't filled this form up, huh? Well, maybe there are various reasons, huh? Some people just want to forget about tax and all that. Some people find him form hard click to us, huh? I'm now so. No, they're supposed to. Oh, yeah, okay. While I'm waiting for them to open up the text written, maybe I can take one or two questions. Yes.
Madam, it's a very impressive presentation, very informative. Thank you. My question is on the issue of, or the subject of depreciation schedule. Say if you own a building, it's sort of a twofold. First of all, do I just estimate that my building is worth 1 million, or do I need to get a valuer to do a valuation? Second, the depreciation rates that we are using for like buildings, cars, furniture and fittings, washing machines, are they Australians, like from the Australian days, or we sort of, if you can just clarify that for us. Thank you.
Yeah. The depreciation schedule or the rates are there in our income tax. It's a schedule. So, yeah, it's not available, but part of our taxpayer, like the services to you guys and all that, we'll try and do something on the depreciation schedule and have it on the our website. Currently, when people request for it, we just go and copy that section of the act and give them, because it's got all the rates. If it's a building, this is the rate that applies and all that. And our depreciation rates too, and the items that are listed in the what, some of those items, especially with gadgets and all that. It still has all those gadgets that are already out of date, and we don't have the new ones there in the depreciation. So we're looking at revising the depreciation rates. Yes, but that's something for us to do, is to have the depreciation rates maybe as a booklet as well and on our website. So, like I said, currently it's part of our tax act. So when taxpayers request, we just go and photocopy it and give it to them. But that's
Okay,
enough.
sorry, Madam, can I just quickly short? I understand we have a standard straight line and a diminishing value. There are two different methods that are used. Can you explain which one that we are allowed to use? Or, yeah. Can you
Thank,
explain? Like, what?
thank you. It's good to know that you know something about depreciation and tax and all that. Yeah, the depreciation rates, we have two rates. One, the straight line method, and the diminishing value method. Straight line, if it's 10%, it's every year you claim 10%, of the cost. Diminishing value, whatever is the reducing balance depreciation, you calculate whatever percentage on that reducing balance. So two different rates, up to you to choose which. And if you want to switch from one rate to another, you can do it only once. None of switch go come na. But you probably more get something. Yes, but we can allow you to switch only once. Yes.
Mi nemblo mi Francis Manke mi kamblo Yalibu Southern Islands. Mi like asking you legally question taso lino big pala. Em desla question equal semblong IPA na lo yubla IRC. Company you talk na PTY Limited. Em also one asking blomi equal semblong and now. Also mi plan bin resteri mandnit lo PT L
Why?
limited na PTY. Also, so you now me boglo sit down presentation below you oglo toklo company taso. Also, now me asking you, you do away with IPA PTY Limited or you Rausim Desla na you talk or me like Sawalo Desla. Thank you.
Thank you lo question blo yupla this la question em. But you direct him go along IPA, yeah. But currently, before you look at all companies, them all incorporate. It's like XYZ PTY Limited. Now with IPA, it's limited. So yes. So that question, IPA now only got boot outside. Maybe one of them here. I'm not sure, but you go ask him all. Yes. But current now all get a PNG company. It's limited. When you see like for me as a tax person, when I see a return that's got this company PTY Limited, I know it's maybe Australia company or with like XYZ Inc. I know it's American company, by just looking at how the name or how the company. Yeah. I'm not aware of that bank requirement. The only requirement I know for bank for opening bank accounts is the TIN. We have we got Mr. Molina from BSP, and I think Hina Bank as well. Maybe you direct their questions. We'll be in here to listen to, and then yes, if there's a requirement, further requirements they are putting there, then we need to talk with them and see. Yeah.
We'll
I think.
question
Sorry.
time. We'll limit the question
Yes,
times for now.
I'll go into the
Should
text.
proceed
I'll take you
proceed on
through
with the.
the text here. So form yipla you got lo front la yipla. So when you are filling this form every year. Sorry. Yeah, sorry. We go through the form that I have here. Yeah,
Please, if the copies have run out, it's the
yeah,
same form we're looking at on the screen. So
yeah.
your full attention here, and later we can make copies
We'll
available
make
for you.
copies. Yes.
If you're
But
the only one person, you cannot stop the rest. We proceed on the same form they're looking at. It's on the board here. So
yeah, okay. Thank you. I'll continue. So you plug get a running business or some company filing requirement form C. Every year, we have changes in the law. When we have changes in the law, we make a change our forms too. If there's a new deduction that government wants us to allow and all that, we have to put that in the form. So when you're filling in the tax return, maybe you must get the right return. We have like form C, like for this particular return, it's for you to disclose your 2019 income and expenditure. 2020, you use Form C 2020. So yeah, sorry. So you've got the form there. You can see your TIN, identification number, and all that. You put that down at the end, and then you come out to the first page is all on your details, who's preparing your returns, whether you keep your books of accounts and all that. So there you see XYZ Limited. They've nominated someone as their. I mean, they've got a public officer there, so that's Smith Jones, and the phone number, the email address. Please, when you fill out the returns, always have your addresses there. We want to communicate with you and reach out with you and all that. We're trying to improve our services to you. Make sure you are well versed with your requirements and all that. If you don't provide this, how can we communicate with you? And I encourage everyone, maybe try to get an email address. Now we are going, next level and all that. And for you to be able to get into the MyRC portal, we are going to go into e-filing, e-payment, all these things. But for you to be able to have access to the MyRC portal, you have to have an email address and a TIN. Without that, you can't access that. So yes, your details and all that, you have to state for this tax return what tax period are you covering. So I said tax period is 12 months, financial year or financial year PNG, 1 January, equal on 31 December. Australians, their financial year or what starts from 1st July, 30th of June. So different country, they have their own financial one. PNG, we use their calendar year, which is 1st January to 31st December. So we have questions there. If the books of accounts are kept on behalf by the taxpayer are audited each year, you say yes or no, and who audited your books? We ask the question, are the figures in the returns in accordance with those books of accounts you are keeping? They must be. If they are not, where's the source? Where are you getting the information from to fill in the tax return? And you must truthfully declare. We talk here. Our work doesn't finish. We have auditors that go and do physical inspections, audit your books and all that. Now, suppose you're working for us. This is the tax return. The first page is declaration. You are saying that everything I put here is correct, true and correct. You sign it. We find that you misled us. You're not working through. There's penalties for that. Plenty of kind penalty, and we don't want to penalize you, yeah? We just want you to pay your correct tax. And then public officer, Mitokya, as a company, you must appoint a public officer. Public officer must sign long this law. For trustees, there's some companies and all that, they're beneficiaries. Maybe the beneficiaries are small kids and all that. They can't run a business, so they appoint a trustee and all that. So the trustee manages their what? Trustee has to sign there. And then we have the section on the tax agents. So if you don't know how to do your books, finding it hard, business is growing, and you need to keep all these books of accounts, but too complex and all that. You got enough money, you go look him all. Tax agents, lo help him. So if they helped you and all that, they sort of sign their date and all that. Yeah. Then we go to the second page of the return. This is the income and profit and loss statement. Miso you finish the PowerPoint, but in the return, this is where you fill those information in. Why you are filling these returns? Because it goes into our what's that IT system, SIGTAS. So yes, the gross sales there. So gross sales, you put him long half. Contract income, for example, blow 50,000, so it's there. And then all other income. We talk this like company tax return, yeah. Regardless of whether you are little company tasol or big plawanem, you all fill in the same return. So some items, long line items inside your return may not necessarily, be applicable to you. So you just fill in the parts where it's applicable to you. So you can look in oil pipeline tariff and all that, all extractive sector, all income belong all that. They fill that in, and then the other income. So you total up all your income, and then you go to your expenses. You list. This is your P&L statement that you are transferring into the income tax return. Yeah. So again, your expenses I've shown you, but now I've captured it in the returns there. Cost of goods, all listed there, and you only fill in which are applicable to you. So we can go down. Yes. And then you see there, we've totaled your operating expenses, 164,410 kina. And then we go to the reconciliation statement. Something where, like accounting and all that, how they account for it is different from how we account for it in for tax purposes. That's why these add backs and minus have to in the reconciliation. Yeah. So yes, so we have the add backs, whatever is not deductible under the tax law. you claimed it in your P&L, profit and loss, but it's not deductible and all that. We add it back by listing it here. If you can go down. And then what items are deductible? There's some, additional allowances like for depreciation, some all exemptions and all that there. It's all captured here. You look in this allowable exploration deduction. These are for the extractive sector. They claim those deductions. And then there's double deductions and all that. Yeah. You claim what you're supposed to claim and go. Yeah. This statistical information and all that. Something that's allowable in the law is these are concessions. Concessions in the law and all that. So where you have those concessions and these are there all there. Some exemptions, some additional deduction. For example, some deduction the law allows for you to claim this amount, but the special concession you can double that amount. You have to capture it here. Like we monitor the concessions and all that, and so we give feedback to Treasury. Yeah, are these concessions working or and all that? So we don't just collect your taxes. We provide reports or our analysis of the tax revenue and all that, the exemptions or incentives and all that. We provided feedback to Treasury for them to do we review the policy and all that stuff. Okay, and then you come to this summary of your tax. So, from the P&L and all that, we worked out your gross, less all your deductions. Your taxable income was 105 kina, 590. Yeah. So on that tax levied at 30% because it's a resident company, the tax is there, 31,677. And then we have the credits and rebates. Me talk, I got plenty, but depending on the business and whether it's applicable to them, there's credits there. So yes, so that's the tax, and then you can see I've allowed for business payment tax of 5,000, which was withheld from the contract income, and this company paid provisional tax, paid their tax in advance of 20,000. We've allowed that, and the net tax payable is 6,600. So we'll be issuing them with a notice. Once this get processed, the notice is generated and sent to the tax company saying you have this much to pay within 30 days. And then some questions. Okay, in the return you're supposed to provide all this. You look in documents and information required to be furnished. You think whether you have provided them or not. But these are what you must provide and all that. If it does not apply and all that, like if for example, did you pay rent to what? If nothing, then you think no and you don't have to. Yeah, so these are just some questions asking you whether you did transact or you did receive money from these. Directors of companies, if you had paid directors fee for your talk directors, they're the ones who manage the affairs of the company. Yeah. So when they manage, you pay them directors fees, salary, wages, and all that. Salary, directors fees, and all that. They are considered salary wage income, so they're subject to salary wages taxes. We want to see when you pay them. Have you deducted the salary wage tax from them? You have to declare all that. Okay, BPT credits I mentioned there. Like for this one, I said NCDC was the paying authority. That was the income they paid and the tax they've deducted and all that. So you have to declare that on this schedule. And then all these other schedules, if they don't apply to you and all that, just leave it. Only fill where applicable to you. In the future, we'll try and sort of simplify the return. For the extractive sector, their own return. You maybe liquid businesses, but operating as companies, separate tax returns and all that. Will yes. And then interest too. If you receive the interest and all that, you put them in this schedule. So various schedules asking you for all the information and payments to shareholders as well. Several companies, the owners are called shareholders. If you have made any payments to them, any payments to shareholders, it's called dividends. Company working good money. There's enough money to run the business. So maybe I pay my shareholders some dividends and all that. Make there some payments, and those payments are called dividends. Yes, so rental payment. I think in my profit and loss statement, I had rental expense and all that. So this is where I capture the rental payments. I have to note who I paid it to, what the TIN number is, and the amount I received. And the international dealing schedule doesn't maybe apply to most of it. It applies to like big multinational corporations who have their subsidiaries here, and if they have dealings with them and all that, we want to capture it here, for transfer pricing. Yeah, also shifting profit, you go overseas to avoid tax and all that. So we are trying to capture all this. Yeah. Go up. So yeah, these are all to do with foreign companies, where they have subsidiaries here and making payments to their overseas. So we capture all that information here. Keep scrolling up. Or scrolling down, scrolling up. Yeah. Yeah, you can scroll up. These are all to do with non-residents. And then royalty payments. So each schedule, there's a heading for the schedules. And if you received any payments or you made any payments out, you complete those schedules. So we'll keep going up. But I think basically what I wanted to cover with you guys, I've already covered it, but these are just some other pages and all that which may not be applicable to you. And like me talk, yeah, this like corporate tax return. Little business or big business, you fill in one. So we try to accommodate, every business. And like for small companies and all that, it makes it more like looks so complex. Or now, yes. But that's something we are looking at, simplifying the tax returns. It's currently at work, yeah, in progress. Yeah, so that's the end of my presentation. I hope you have learned, something, yeah, from my one me talk finish, yeah. We are there. Our services are free, yeah. We are not charging you for any advice or what you. Only we want you only to pay the right amount, do the right thing, and come and pay and file on time. But otherwise, all our services we provide to you is free of charge. I think other regulating agencies and all that, they have fees and all that. We don't charge fees. Yeah. Yes.
Sorry, madam. My question is related to director's fees. If we pay director's fees like each month, which sort of lodgement date do we go by? This the 7th of the next month, or in which form do we sort of put our director's fees in? Is it form S2? Or if you could, and what rate do we apply on the director's fees? If you could just.
Yeah. Okay.
And also, sorry, while we're on that, if the director has, like, say, a business that he or she has registered under like a sole proprietor, and she has a TIN already in that sole trader, do we use that TIN, or does he have to apply for a new TIN? Thank you.
Every company, individuals, one platinta sola. Like in the case that you just said and all that. That director will have only one TIN, but will declare the director's fee, being a director of the company and the business activities and working, yeah. And then it'll one platinta all. Yes. Are you a director or are you business? No, so I mean like one name so that I can respond to you. Yes. If you're a director of a company and all that, you get paid directors' fees and all that. It's not your responsibility to be, filing the what. It's the employer. Whoever is running the business, they have their what there. They file their what there. Your salary, wages. Employer takes care of that. Yeah. Salary, wages, 7th of the month, but it's the employer or whoever is running the company, 7th day of the month. salary, wages, returns, remittance has to come in. So like you apply, like now me covering corporate tax, that's your main liability. I mean, you're liable for corporate tax. But you company, you got all employees, salary wages tapa, your responsibility to deduct the salary wages tax remitted by 7th day of the month. If you enter into other, transactions, for example, you're running a company, yeah. Now, your company, maybe your revenue is coming from rental properties. Plenty time you will find him hard to managing these little companies, So we give it to the real estate people. You manage the company, but I'll pay you management fee, yeah. So you enter into those management fees, withholding agreements and all that. And then there's tax, like management fees, withholding tax, or this like that. So it depends on the transactions that you enter into with your suppliers or whoever, another party and all that, and whether tax is applicable. If it's applicable, then we open a tax account for you. You have to pay for that. But your main taxes, firstly, corporate tax. If you have employees, salary wage tax. And then GST. Plenty of businesses. GST requirement, if you are earning more than 250,000 in a year, compulsory to register for GST. Underneath less than 250, voluntary. You like charge him GST? Okay, you register for GST, but it's voluntary. And for GST, if you're not registered, you shouldn't be charging GST to whoever is, supplying you. That's against the law.
Thank you. Metok big plak mamas lo disla IRC team long explanation lo disla kind of work me pain up in facing before long 2008 na 910 come out up. I mean first time lo me pla. So most of us in remote area we haven't understand what is tax rate and how it will work into our like small business like most of Morabian, we have a cooperative, maybe around 200-300 cooperative. But some of them are they already gone, but some of are still existing. So time this la work is how by so kind of me no film this la information, but I have a thing. But me penok I want pack an idea. But yet we are working. So how can we how by you pa work kind of a penalty? And me pa poretim this la or by me pa work or ikat samda kain tok pa you pa give him because me pen up in understanding this land a command up now this la RC and we work logo big play inside long provinces now we work. So me pa start before na command up inside lo 14 to 15 years or so lo me yet me pa work one time all 1,000 pa farmers me pa ekpode cacao coffee. Na me pa no ka this la kain without understanding this la na me pa work inside. Na inside the disla government and me now work lo come up. Now come up with this la. Oh, start before part. Also me pesta lo rumotara me pa no understand him this la. How lo feel him this la. How by you pa by work because suppose you pa giving penalty and by me pa appreciate this la income lo me. So think that so please enough you pa can give some that kind point or think so me can please embellish in a kai. By me go inside lo talk long how work me pa by work inside lo organization where me pa work as a cooperative na kamanta. Thank you.
Thank you. Yeah. Currently, we don't have any specific information for like tax, materials for cooperative, but we'll take that on board. We're not doing this awareness just for the sake. We're taking into consideration your issues, and we go back and give it to our, commissioner said. This is the like last year and the months before. We've been conducting awareness in different locations outside Mosby and all that. The feedback we are getting from the participants are, you are telling us we must do this, do this. Please show us how. We came back with that feedback to the Commissioner General, the Commission. This is the Commissioner General said, do this awareness, this one here, be more practical, show him all how to do things. This is the first of it. Yeah. And two, there's various reforms undertaken through our current Commissioner General. Plenty something you need long, change him. I want them to make tax administration more effective. So I think, effective, friendly as well, and all that. So one of those reforms is that our services to you guys, we think it's lacking there. We need to provide more materials, produce more materials to guide you. We need to carry out more awareness. We need to be attentive to your phone calls, not you people ringing and phone. Those are the things that we want to do changes in the IRC now. So hopefully in the next few years you see us improving that. Yeah.
Thank you. I think all questions will be around in penalties too. We got all session law Friday. Our debt enforcement lodgement division, online law effective these law penalties. So they will have their presentation too on Friday. Paul talking you aburusim this la mark Bahamas penalties, but I think penalties we could have covered too. But there's a team on Friday too. The attempts are coming now, lo penalize you. Na by proplanti save at I'm more schedules because by this penalty will be applicable to you. So Friday they will also do their presentation. So plenty blow you I think ask and now too you may got questions surrounding penalties. So we'll see how we can incorporate that on the last day by the team from DLED, that enforcement, to explain, at least clarify to use. We'll take 1-2 more questions and look at how many hands are going up. Otherwise, you make it. We had this our gentleman here from the morning. I'm still putting him on. He was the first one, and we give me the question time. So.
Yeah, thank you. Thank you for your presentation. My name is Madhu Veratao. I just want to know, when you launch a CIT accompanied by the financial, do those finance have to be audited?
Yeah.
Audited accounts.
I think for very big companies and all that, it's a requirement that their books of accounts must be audited. Yes, for big companies. Yeah, but you little companies, obviously, like auditors go through your books. It's up to you, but I think it's a requirement for big companies. What they file to us must be audited reports.
For small ones, it's okay.
Up to you, but so long as you keep proper records. Yes.
Okay, thanks.
We'll take a question from the here. Thank you. I know you put your hands up.
Thank you. My name is John. I just want to ask for the TIN number. If the previous company name, having the TIN number of the company, and if I want to change the business name or company name, is it okay for me to use the same TIN number?
You can use the same TIN numbers. You go to IPA, you make those changes, come with those changes to IRC. We just change your records, but you maintain that same TIN. TIN, by someone you in a business finish, we just deactivate it.
Thank you.
Now. Yes. Hazel here, the ladies in front.
We have one from the side, so I'll come back up this way.
I can't see them.
Thank you, Sred. All IRC workman Mary Yubla president all good plus something. Some blah you me black I'm sit on because poret law penalty that's all. That's why you see many hands up going up. I am one of those. I think if I have to categorize myself, now that I am delighted, it bringing light into it. So what I used to think about penalty is that I'm already imprisonment. One. Number two, ganasi order. Now I'm compelled to say two things only for you to make note after this even sessions to go. There are in the name of so-called pretext of tax returns and tax rebate and so according to the presidents that were presented. I just attended today, and I am very, very happy today to tell you, madam, that if you could place a call center like I was already thinking about you. If I was to look for, if it means to pay, I was to come to you straight. And the first thing that came into my mind was that I think I have to ask this lady's business card. Why? Not to compromise. We are paying so much, but actually to no avail to find that we are not categorized under one of these. And there's a beauty about it. So my recommendation after watching this, now I am relaxed now in a sense that there are rules that I would only follow. And I also find that the time that I missed, and that doesn't offload me. I know I can, retract and get into that track, and which this presentation is putting me into that track. Now, if you are coming, especially especially these tax agents, especially the IRC workers, please, Mibla, like him, Sambla, all mature, especially I prefer ladies, not men, because they are calm, loving, very self-explanatory, like you ladies, very beautiful ladies who are presenting here today in the morning. I wanted to listen more. So what am I saying here after saying this? Please, you blah put in one blah, some blah kind of some and desktop like think tanks or those ones who are struggling. We have the money, but we must pay to the right people, so we do the right thing. Many hands are going up because of the tax penalties. I know that's in my mind. Thank you for listening.
Thank you. Like I've said, we are,
Thank you.
trying to, under all these reforms and all that, we want to improve our services to you now. So currently, we have a taxpayer service project team. I had that team. So we produce the information kit. We're doing this awareness, but we hope that we'll do more by listening to you, your challenges and all that, and we'll try and see in what ways we can help you through our services. Yeah.
Thank you, Mrs. Masu. Yes, we'll take questions. CIT is a very good text, and I think our director has explained it really well. We'll take questions.
Thank you. Question Blumi, I'm all same. Over a period of time, each year, people submit him in income tax report Blumi. So over time, of course, but you look him trend long, Emma, pluses or minuses. So lot is a time. You look him like trend long, return Blumi. Suppose you get minus or get a time, or Mipla no making money. Is it possible you lo call Mipla come in, asking Mipla lo, or you can talk Mipla lo, one can text regime Mipla can go inside long em? And mom la question me like ask him. Because Mr. House and plenty time, by now Mipla making money all the time. Pempla go up and down also. So the time you look at report the Mipla, you can talk him Mipla. One can text regime Mipla can go inside them so they benefit in business. Thank you.
No, thank you. Good question. Emna also na mi pla carry out all this awareness na mi pla make him aware lo you pla one regime like now government introducing this small business tax Mi talk past time every businesses regardless of whether you are micro, medium or one same rule applies to you. Na noga mi pla looking mo same. Maybe it's the rules and the law is so complex for these small businesses to comply and all that. So I'll introducing this small business tax. So when they introduced it, the law was simple. So we got a group together, looked at the law, simple regime. First thing, the form must be simple. We made it one pager. You look in company tax return, how much pages and all that. SBT, one pager. All you need to fill in is your details, what your income is, what your tax is. That's all. Record keeping, very minimal. You know, Savalo keeping good record. Kasi exercise calculating tax, you buy tax, subim gulo have no got the information there. We analyze those information. Yeah. Yes. Okay. Yeah, I mean, but it's up to you. I tell you what the law is, what are the requirements and all that. Like, for example, you talk, yeah. Maybe you are reporting loss. Are you reporting correctly? Are you keeping good track of your what to be, report? So we look at your books again. Maybe you're not reporting correctly. That's why you are always in, red, and all that. Yeah. But you look in, you're operating as a company, you make losses and all that. Maybe the company structure is not working for you. You're gonna send him registration below your IPA, yeah, small business. Cancel him this la one niya, sole trader, one niya na come na register again. We maintain that same team, but we change your what from corporate to SBT. And we just guide you and all that. You make the decision. Sorry, here, gentlemen here first, please. Sorry.
Thank you. Number one, I'm clarity to sol namin long this la presentation blue yellow corporate tax na provisional.
Tax.
I think you answer him this la past time because you got narabla to plus it.
Okay. Provisional tax meet okay. It's just an estimation of what your tax would be for the following year. So we want to like collect it upfront and also like we play sort of break him up into installments, rather than just giving you a bill for like at the end of the year you file your return and you have $1 million to pay. You think you have that? So we said pay through provisional tax, maybe 300,000, this. So you pay your tax up, it's a prepayment of what you are supposed to pay when you lodge your return. So we collect that. What's that? Yes, yes. So when you lodge your return, we apply calculating liability. I'm already working some prepayments. You put it against. There's a balance, and you just pay that little balance. If you pay more in provisional tax, it's refunded to you.
Okay, thank you. Narabla two black question niya long association. Since me pass to loy all associations he come up some time occasionally. Money decide lo work him or a group of people decide lo work him register him association isa come up occasionally time activity come up. Now for instance we've registered also in 2016 an association. Right now me ask him to also shubla halbi me association ne silibwe na onem status blongan. Also me papa blo registration ya mino sabem stop wetu.
Okay. Some associations, I think a lot of women these days, with their members giving them what they, like doing your own business, maybe it's also if you combine, form an association and do business. So if you form an association, but your motive or your objective is to make profit, then it's taxable. And me covering Pinese associations are treated as companies, so or rules block company applies. They are associations, they are created, like NGOs or non-profit organizations. Their objective is not to make profit; it's just to get members together. All this. So for them, like because it's not profit oriented, objective long only block making profit, but for the members, whatever they gain there, they use it. Yeah, that those associations can be granted exemption from company tax, but they have to write to the IRC saying we form an association, but this is the objective of the association. It's not a profit making business. You write to IRC, we would association. I think you have your constitution or whatever there. You have to provide that. We go through your constitution to see that your objective is not for individual, profit what there, but for community benefit and all that. Then we write a letter to you and said you are exempt, but you're still required to file. Because when you file, we want to know that the income you are getting is going to those activities that you said you were going to, non-profit, whatever. Yeah. But people are looking and say, oh, now you got different, now you go on them. Rousing this exemption, you pay your tax.
Okay, finally some practical application blong all good presentation blue ya. You go pasken one them all narbla line agencies like all banks time me play register in company na inokat money work lo come inside lo company. Bank tu ikat all fees belong any stuff. So emi look also double trouble. So idea below since you got that the vicinity right now it's like you bla connected lo halpi mi bla. So you bla pasim nisla tok ya IRC ego long all bank special provision blo trangu mania emi stop long way na toki molol sem trangu this lol bank fee ya maski this la amaski na per month ya you bla negotiate one them all it makes our life easier. Ah, law belong, we can have laws and regulations and policies, but we have to bend these rules. Ah, lo stretim isabe. Yumi, yeah. Papua New Guinea, Yumi stop. And me also talk Lenol be unexpected. Yeah, thank you.
Thank you, Lolisla comment. I think we all know that, Prime Minister, himself talk take back PNG, yeah. So he wants to empower Papua New Guinea to enter into business. They came up with an SME policy. SME policy. Now, each government agency, we have a role to play in that policy. So, from IRC, our role is to simplify the tax law. Have a simple, so we are playing that part. Each government agency or banks too, government they put the money inside the bank to assist you guys. But I can't tell them what to do and all that. It's theirs, yes. But if we all aim to make sure that we take back PNG, those are the things we should consider. I see we already doing. Yeah.
Thank you. I'll allow for the last two questions. I'll take from one of our young participants here. We've got a question and one from this side. It will bring us to 12:30 and we'll go into recess.
Thank you, Miss Katy. Name do me YG. Me just got one little question, low cyber depreciation. For myself, I'm running a new business. It's registered under company, so it's a LTD. Mila just have a little depreciation, like we have our fixed assets number, like company chairs or desks or a car. Just like how is it calculated? Is it monthly calculation or annually? How is that done? We just like a little clarity, Lodisla. Thank you.
Thank you. Good question. Depreciation and all that as a company, you report annually, yeah. So how you report, it'll be the annual depreciation. I just mentioned earlier, we have depreciation rates, two rates, two methods, straight line and diminishing value. Yes, and under the tax law, anything purchased which is below 1,000, you can outright claim for deduction. But where the value of the asset is big ply and all that, you depreciate over time. Yeah. A lot of you have those information pack on the SBT. You have my name, my contact details there. Feel free to send me emails and all that with you if you need assistance.
The last question from Miss Jessie here, and then we'll conclude.
All right, thank you, madam. Question Bumita Solo. Income and expense, it's subject to tax. So when I represented on the one, will that include tax, Lohem, or by excluding tax?
On that form.
On that form, yeah.
Yeah, you fill in. Like now, people like schooling you long, how long one am I? You fill in, but our system, it's all configured there. So if you fill the wrong thing, it will tell, it will make the adjustments and all that. So, yeah.
So the amounts there would end up including GST law and by presented?
No.
It has to exclude that.
Exclude GST.
All right.
And then you report GST on the GST return.
Thank you, Thomas. Okay.
Okay.
Sorry, one play here, there.
I mean, time blog. I mean, no get the time in Mr. Comes, so I'll get the time.
Thank you. Name Blomi Tabita. Mila kaskim this la question law. 30% interest, tax. Um, you talk by me, you plaba work lo this la form C, lo katim out sample section where best utim or SME. So, think blomi this la form C and me bla kind of same lik SME me bla all get a exo mobilo. All big bla company one time me bla film same bla. Na 30% ya all two film na mi pla two one kind. So ina people can look savelo this lab where time you pla cut him out too, but mi pla can reduce him down 30% come down low SME too. Thank you.
Mi talk long all tax returns, yeah, mi talk lo side long simplifying the return, like not brother talk lo cooperative societies, maybe we have a return to be filled in by cooperative societies only. The extractive mining petroleum companies, they have a separate return because there some of the expenditures and all that are different from what a normal business. Yeah, but we are looking at that. The returns are already designed, but we're still, doing our work and all that before we come out with them. Yeah.
Madam, thank you, Strat Long, IRC Long, this taking the leap forward long, making a very informative session, workshop lo mi bla. Me fly out lo one bla provinces from the border. Me believe we are very grateful for IRC, lo this leap forward long, explaining and bringing come down this information come down so that many of us can, who are interested or who want to go into businesses and those that are already existing, we like variable information so that we can be able to comply and add value to society through our contribution as taxpayers. Clarity that's all with the new government accounting system. Mipla sampla by osem, all by mipla gatimol invoices to the government in terms of service. Mipla gim the government. The new system, we believe, through the IFMS and Bauli deducting straight go along IRC, obviously, all various ports in the country. Mi kisim sabla clarity ta solo sem bami bla through lo disla. How ba bla give feedback lo all monthly statements lo come long all businesses or ba bla give COC or some bla clarity ta sol lo disla. Thank you.
Thank you. I think what you're referring to is the GST component that has been now under the government system, and all. Government now wants to enter into contracts with tax compliant businesses. Now, me plapainin like like we administer tax and all that, but we have assessment made on our administration now, whether we're effective enough in terms of our services, now narpa something. And during that one of those reports or whatever that was done on us, they said, look, we're seeing GST should be your number one tax collection because everyone, regardless of whether you work or you whatever, everyone pays GST. Yeah, you may go to a shop, you may buy one, yeah, but we are not seeing that. Salary wages tax is the highest one, yeah, and what they said is true. And we see that GST, those who are, like we go and pay for goods and services, they collect the GST. They're supposed to remit it to IRC. They're not doing that. That's why our GST collection is low. So one thing to address this is we started with government contracts. Withhold the GST, send it. Let me talk here. Withholding tax is just our mechanism we are using to withhold. You lodge your tax returns, we go through it and we credit that GST that we've collected and see whether you have a balance to pay or we've collected too much, we refund you.
Thank you. Thank you, Director. The detailed presentation on the GST and what he is referring to would be the GST Section 65A will be tomorrow morning. Will be tomorrow morning to answer all those questions. We'll take I think all, you still want to ask a last question? That's okay. We conclude for this morning's presentation. Again, Yumitok, thank you for the very detailed and simplified explanation below company income tax. Bayumi break after lo lunch, bayumi gatim salary wage. So how we calculating salary wage tax will be right after lunch. For now, for lunch, I think we provide him afternoon tea or yesterday, so we've sort of brought the afternoon tea forward for our participants. So you probably have him what you're supposed to have in the afternoon at lunchtime, na binun and you got us all. So kindly, we've decided to do it this way. So kindly step out, again, grab a sandwich or a few biscuit and coffee, water. We convene again at 1:30. Thank you.
Your master of ceremony is very well and 200%. But when I ask you, I know that you never understood departments because every activities we are doing is on the